Here's your Bitcoin daily chart. All right. In mid-April, we made the high. Now, where is the S&P 500? Let's look at the SPX here. The SPX, short term, possibly just made a high 4 to 6 weeks later. We're going to find out, obviously, over the next couple weeks if that's the case. If this follows the Bitcoin model, we're going to obviously keep an eye on that. But I just wanted to show you that is that there are these trends, there are these similarities between cycles. So the reason why these cycles work and they generally, if not repeat, they rhyme, is because do you know who's trading all of this stuff? People, emotion, greed, and fear. So the greed and fear, the greed that was in the dot-com bubble in '99 was the same greed emotion that was in 2007 and the same greed emotion in 2021. So if you understand that, again, charts are replications of humans trading via emotion, it starts to make sense why history tends to rhyme, if not repeat.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway sharing his insights regarding Bitcoin, cryptocurrencies, and market trends for June of 2023. Soloway notes that human emotions like greed and fear influence trading decisions, contributing to similarities between Bitcoin and stock market cycles. Soloway expresses caution about Bitcoin's short-term outlook, believing that the recent breakdown below $30,500 may indicate further downside potential. He discusses his recent targets, highlighting his short-term Bitcoin trading approach and his most profitable decisions in both bullish and bear markets. Soloway also discusses the recession and what he believes the Fed will do next. Let's get right into the latest interview with Gareth Soloway as he gives us his prediction for Bitcoin and the crypto market in the coming weeks. Before we dive in, don't forget to hit the like button and subscribe. It's a tremendous help for the growth of the channel and helps us bring you more content just like this.
We're going to go into Bitcoin and crypto next. Now, one of the things, and I always tie crypto to stocks, is because they are risk assets. We know that, right? Eventually, I truly believe in Bitcoin, and I believe it's the digital gold of the future. But right now, it's not. And I say this all the time, is that it started in '09, we're in 2023. It is a 14-year-old, right? Bitcoin, again, you guys know I've been steadfast. I think personally, 30,500 is the short-term top. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. I look at the charts. As long as we haven't taken out 30,500 and stayed above it, I'm in the camp that this is still going to come back down. All right, we did fall back there. We fell below it, okay? Now, notice how as we broke down over the weekend, number one, volume was light. Number two, it was a risk-on period because of the AI bubble and the AI craze. We went right back to that trend line on the charts, and then we pulled back here. Now, again, what I'm watching for is do we take out 25,870? That is the lowest point in the last couple weeks. Two hits, one here and one here, okay? If we take that out, then you drop likely down just below 24,000. 24,000 is your short-term target. Now, I would probably be covering my short right in this area. Okay, I might even flip it to a long for a quick trade. But a reminder out there, I'm telling you again what I likely will do. And number two is that I'm a short-term trader. So if I do decide to go long around 23,500, 23,007, then I would look for a bounce and I would exit. Because again, being a trader, you can be short-term bearish, but still take longs, and you could be long-term bullish and still take shorts. Like, it doesn't matter. You're trading the levels. You're trading probabilities. So many people are like, oh, I'm only long or this or that. Okay, I'm okay with that. Again, especially for people that can't study charts, but there is a wealth of information that the charts give you that essentially can help you make money in bull markets, in bear markets, even when you're going counter trend, even going long in a bear market, even going short in a bull market. Gold and silver. Quickly, we're going to do gold and silver here. I know this is going on a little bit longer than the usual. That's okay. I still think gold, again, gold hits short-term support. That's fine. I still think there might be one more dip to about 1920, 1925. But again, at this point, I remain extremely mid to long-term bullish on gold. Gold is the pure play here. Bitcoin eventually will be. I know I'm a big bull on that long term, but not on the short term. Gold right now is the play, in my opinion. This is the pullback off triple top. We might go a little bit lower, but in this range, this is where you start to rock and roll. But I want to show you something that tells me the NASDAQ. Here's a chart of the NASDAQ. Now, the NASDAQ has had a nasty run, an incredible run just over the last couple weeks, right? AI, all the AI stocks, including even ones that, are ancillary ones like Microsoft and other ones, they've been running. Apple's not that far away from an all-time high. One of the things I want to show you, and this is one of those mind-blowing things, I want to show you, so number one, let's take a look at some trend lines on the Qs. All right, so this is the QQQ, the NASDAQ 100. This houses the Googles, the Microsofts, the Metas, the Apples, the Nvidias, all of these, right? So what I want us to do is take a trend line from this top of the shoulder down to this shoulder here, extend it out, right? Wow, look at that. Okay, so we have a trend line that coexists right there. Now, what about this pivot area right here? Take a trend line, stretch it out. Now we hit that. Okay, now let's take another trend line right through these lows and put it right there. So again, look at this. Pivot low, right here to this pivot high. They're all three coexisting right here. Let's do a Fibonacci retrace. Many of you guys know Fib. I'm a big fan of the Fibs because anything that occurs naturally in nature, if you look again, and I've said this before, but the petals on a flower, Fibonacci sequence, the rings on a tree, Fibonacci sequence. If it occurs in nature, there's some impact on us. We are part of a bigger world. It is generally going to be important. So let's just see. What happens if we take the all-time high to the October lows? Where is that Fib retrace? Well, would you look at that? A 618 to the penny, essentially, is where we're currently trading on the NASDAQ. Now, listen, does it mean that the fact that we have four factors here, does it mean that we can't go higher? No, we could, right? Factors, and this is what I want everyone to understand. The factors of a chart are probabilities. The more factors, the higher probability. All right, now, you can get probabilities to 99%, and there's still a 1% chance it doesn't work out. In the case of four factors like this, I would say there's about an 85% chance that the NASDAQ will start to correct and pull back. Now, the question is it going to be a big pullback, a little pullback? What is it going to be? I would say there's a decent chance that this is the high of the bounce cycle. All right, in any case, that's the analysis there on Bitcoin. I think, again, a recession is now a no-brainer. And by the way, the Fed says minor recession. No, it won't be a Great Depression, which a lot of people are insanely calling for. That's later in the decade. That's later on.
Soloway expresses his belief that a prolonged recession is inevitable and disagrees with the Federal Reserve's suggestion that it will be minor. He attributes the impending recession to the market's reliance on the Federal Reserve's stimulus measures, like money printing, which Soloway believes have artificially prolonged the bull market since 2009. He anticipates a more extended and corrective phase coming soon. Soloway says this longer drawn-out period is necessary to mitigate the imbalances created by the prolonged bullishness. He suggests that the economy needs to undergo this corrective phase after an extended period of intervention and stimulus, preparing for a future that entails market adjustments and a recalibration of the economy. What do you think about Gareth Soloway's prediction for Bitcoin and the crypto market in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.